The answer here is kind of in between. I think he knows the importance of gold, but he doesn't want to let the public and investors realize that he's concerned about it, because being concerned about gold means you're concerned about your crappy Federal Reserve note or fiat dollar or I owe you nothings, right? Thursday, January 29th, 2026, Monaco 64, home of alternative economics and contrarian views. Well, there's a lot to talk about if you follow gold and silver, and of course we do. And we are big proponents, of course, of sound money, not of this fiat regime that we're under, of course. So I want to start with Jay Powell today, and then I'm going to refer to a pocketbook of gold. I'm going to refer as well today to the FT, the infamous FT editorial from 2004, where they said it was pointless to hold gold. What else am I going to refer to? Well, I'm going to refer to silver as well, because I think there are signals out there that tell me that silver is just starting. And there are a lot of nervous Nellies out there. And that's a reference to one of my posts on X yesterday. What else we're going to talk about? I'm sure I am probably forgetting something. Oh, yeah. We want to talk about, we're going to put this together with what's going on in the stock market with the U.S. economy. Yesterday, the S&P traded up to 7,000 fiat dollars for the first time ever, and I saw that President Trump posted on Truth Social that happened, and he said America is back. And and I thought it would be interesting to look at household wealth in the United States, and how this crackup boom that we're in, where all basically financial assets, hard assets, gold and silver, where they're all like going to the moon, who that's really helping, and whether that's really helping the general public. So before I start, just wanted to let you know that Karen, who runs the merchandise store, she designed this mug, Going Gold. And that, of course, is related to this editorial. So if you're looking for a nice mug to do with gold, check out the store. There are other mugs there as well, and other products. And the link to the merchandise store is below in the description. Let's start with Jay Powell and what he said yesterday, because yesterday we had the decision by the Federal Open Market Committee, or the FOMC, whether they're going to cut rates or not. They didn't cut rates. It was as expected. And a half an hour later, after their announcement, Jay Powell held his usual press conference, and someone must have asked him, because I didn't listen to this press conference. Sometimes I do, but didn't feel like I needed to. But someone asked him about gold, what gold was doing. And at the time, I think gold was around 5,200. It wasn't really doing much. It was coming off a bit. Silver as well was unchanged on the day. And this is what Powell said about gold. Didn't say anything about silver, of course. He said, don't take much message from rise in price for gold. So is Jay Powell really that ignorant about the importance of gold, seeing that his major counterparts everywhere around the world are buying gold hand over fist for the last 4 or 5 years? Well, I think the answer here is kind of in between. I think he knows the importance of gold, but he doesn't want to let the public and investors realize that he's concerned about it, because being concerned about gold means you're concerned about your crappy Federal Reserve note or fiat dollar, or I owe you nothings, right? Because that's what the dollar is. It's a debt obligation that you have to keep rolling over because it doesn't pay the creditor. I think he might have triggered the move higher in gold that we've seen since then. I mean, gold flew after that. It closed over $200 yesterday, and I've never seen anything like that. And the other thing I want to say today is that this rise in gold late yesterday of over $200 has been followed by another rise overnight of another $130. And I asked the question on X or Twitter, what's going on here? I've been following gold almost every day, every second when it's trading since 2002, and I've never seen this kind of move. So is it because of Powell? Is it because someone knows something we don't? And what could that something be? Well, I think it could either be an imminent gold revaluation of the statutory price by the U.S. Treasury, or it could be war. There's a lot of talk, saber rattling vis-a-vis Iran. The United States is sending its fleet to the Middle East. So either one's possible, or both are possible. And that's why I think we've seen this move. If we're going to hear something, it could be today when the U.S. comes in. Of course, it's still early doors. It's 7:30 a.m. London time. So that's Powell out of the way. Now, let's go to going gold. And I've gone over this many times. I'll try to find a video where I talked about it, and I'll put it up here. But needless to say, the story is that I was going to work. I was at the train station back in 2004. I worked in the city of London. I bought my FT waiting for the train. I used to like going to the editorial page, and I saw this, going gold. The pointlessness of holding bullion continues to sink in. And I'd been buying gold for almost 2 years by then. I started when gold was around 320, and that time of the editorial, I wrote it down here because I cut the editorial and had it laminated. Gold is at $400.65. Yes, $400. That was April 16th. And the FT says the pointlessness of holding bullion continues to sink in. And I'm going to skip to the last part here. And the FT says, given the pointlessness of holding gold, the speed of its official sell-off scarcely matters unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse. By limiting the impact on the price, that would imply some irrationality on the part of the market. But then holding gold is irrational in the first place. Perhaps the central banks are ready to go slowly. Whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. I guess they couldn't have been more wrong. So what I'm trying to tell you here is, yes, I've been hearing from people who haven't followed gold, who are supposed specialists, telling people, sell your gold, get out of your gold, sell your silver, don't get married to your position. Well, Warren Buffett got married to Coca-Cola and all the blue chip companies that he thought were good, right? And he barely ever sells anything. So what I'm trying to say here, think of the alternative. That's the thing I always think about. Do you really want to get rid of your gold and silver and put that amount of cash that you would have, or fiat reserve deposits, would you want to leave that with the bank? Seeing that the banks are still in deep trouble. I mean, the FDIC its last report shows that the unrealized losses are still massive for the U.S. banks. The losses held to maturity are massive and pretty unprecedented in the last 4 years. What kind of losses they're sitting on, and yeah, you need to be mentally tough. You need to ignore the mainstream financial press. You need to ignore the nervous Nellies, as I noted yesterday about silver. And this was just before silver and gold took off. I saw a video by a guy I've interviewed here who said, I got out of my silver, and he didn't even have silver. He had an ETF. And he said, don't get married to your position. And I think he's wrong. I have to give him credit. He said, if you want to keep your silver and gold, do it. But I'm getting out, he said. So I posted, I said, I detect a great deal of nervous Nellies in the silver stacking community who are already selling their coins and bars. To me, that is a sign we still have a long ways to go in terms of price and time. And I do think we have a long way to go. And the reason is this here. The first reason is this chart of gold. Yes, gold, not silver. Because gold has been taking off before silver. We started taking off back in March of 2024. We broke through this cup and handle here that we had. And back in the beginning of the century, there was another cup and handle, and this was the first time I learned about cup and handles. And guess who pointed it out to the community? Well, it was Jim Sinclair on his blog, jsmindset.com. And we were following this cup and handle, and look what happened after it broke the top of the cup. Well, gold went from around 400, 430, all the way to 1900. That was in a matter of, let's say, 5-6 years. Yes, it sounds like a long time, but I think you need to think more long term, not in terms of days or weeks or quarters, in terms of years, if you want to really preserve your wealth or even make quite a bit of wealth. I would say, yes, gold and silver represent wealth, but in a fiat currency environment that we're in, I think it's a good way to accumulate wealth as well, because everything else is going the other way. So, and more recently, back in 2024, we broke through this other trend line that takes the high from 1980 and 2011. And it's been a one-way street, basically. Yes, of course, there are daily oscillations, weekly and even monthly oscillations, but on the whole, this thing still has legs. Just look at what happened in the 70s and even what happened from 2001 to 2011. I think we're just starting. And that's where I skip over to silver, because silver, unlike gold, has just been unleashed. We are in 2024 in terms of silver, right? We're just breaking out. And the cup and handle, of course, has been huge. And it's, all the way back to 1980. So that's why I keep saying, hold on to your silver as well. Don't listen to people who haven't followed silver and are now just telling you to get rid of it, take profit. And I can understand that. I've been hearing that a lot of long-term stackers are calling their coin dealers or precious metals dealers and selling, because they've maybe been around since the 70s, and they've seen what happened in 1980 and 2011, and they want to make sure they don't get left holding the bag, so to speak, that silver will go back down and go below 50 and go to 20 again, and they won't have taken any profit. They could be right. I'm not saying I'm always right, and I can't, no one is always right. But from what I feel, from what I've studied, and from what the system, the juncture that we're in, not just monetarily, fiscally, geopolitically, I think we're just beginning. And so I think the chart of gold is a good way, a good indicator for what's going to happen to silver. And that's not even talking about the silver miners or even the gold miners. They're still underperforming bullion quite a bit. Now I wanted to turn to the S&P 7000 comment by Donald Trump. He said, America is back. And yes, it's a bit frustrating, but I can kind of understand what President Trump is trying to do, and Besant. They're trying to resuscitate a patient that is in critical condition. That patient, of course, is the U.S. economy. It's been given the wrong diet since 1971. And I can see them clutching at things to try to cheer people up. But unfortunately, if you look at the Dow, and I'm going to take the Dow here instead of the S&P, but you can take the S&P as well. But the Dow is crashing in terms of gold. And you might think, well, does that matter? Well, it does, because gold is old money. Back until 1933, the Dow and everything else was measured in terms of gold. So when you see the Dow-gold ratio doing what it's doing now, that's concerning. That's not a sign of an economy that's doing well. And yes, it's doing well for the top 1% or even the top 10% if you want to add that. And I posted that yesterday on X, and I said, keep the top 10% happy. They own 69.1% of household wealth, actually. With goosed up financial markets and give the bottom 50%, well, they only own 2.5% of household wealth. Give them a $2,000 check or more to alleviate the affordability crisis or currency debasement. And cross your fingers, it will result in victory in November. So they could give them even more than 2,000. And here's where we come to revaluation, right? If they revalue the Treasury's gold from $42.22 to, let's say, $5,000, which is right now below the market, they would have a windfall north of $1 trillion. And with those $1 trillion, they could give these people a check. They would feel a lot better. And what that would do as well, that would goose up even more the stock market, financial assets, because they could take some of that windfall as well and use it to retire Treasury debt that the Fed holds, especially longer end Treasury securities, which the yields are still very sticky and very high. So they would kill two birds with one stone there with the revaluation. And it's something the Federal Reserve has spoken about. As recently as August, Barry Weiss wrote a paper for the Board of Governors of the Federal Reserve, and I'll put a link below in the description. You can have a look about gold revaluation. What that would do, gold revaluation, even if they put gold at 5,000, despite the fact we're at 5,500, it would create a floor for the gold market. Gold would never go back below 5,000. You would see gold explode higher, even higher than where we're now. And that's why I said yesterday, something's going on here. It's either an imminent revaluation or imminent war or both. So yeah, I know I'm going through a lot here today, but there's so much to go over, and I'm gonna end with a pocketbook of gold. Highly recommend the book. I've had the co-author Peter Carlin on regularly now. He contacted me last year because he follows the channel and he knows I've always recommended the book. And the book, of course, was a limited edition back in 2010. It's very expensive if you want to find one. Well, he's published a PDF that you can buy for $25. Highly recommend it. Very good value. I'll put a link below in the description. So it says here, Pocket Book of Gold, a survival manual for monetary mayhem by James Sinclair and Peter Carlin. And I think you will find that when you read this book, you'll be a lot more immune to the psyops from people like the FT. And I knew I'd forgotten something. Well, there's an article yesterday from the FT from someone called Katie Martin about the precious metals. She says, the precious metals feeding frenzy, gold and silver are on a tear, but buyer beware, right? And she said something here that's total rubbish in my opinion here at the end. She said, an outbreak of common sense. So let's safely assume that that's not going to happen anytime soon. Well, that's common sense in terms of monetary and fiscal policy, right? But then she says a more probable test would come from a drop in stocks for any reason that prompted marginal gold and silver buyers to close out debt-funded bets. I'm not seeing stackers and people who are into gold and silver. They don't fund their purchases of gold and silver with debt because they're trying to get out of that. Yeah, maybe some do, but yeah, so beware of the FT, Wall Street Journal, CNBC, all the usual suspects. And this will help you, this book, navigate this psychological war for your real money. There's the old saying, who has the gold makes the rules. You want to make your own rules as an individual. You don't want to be beholden to the state, right? And I think having gold and silver is a big part of that. So there's a really good page or passage here. It's on page 70 in the book. Let me see what chapter it is. So if you buy the PDF, you can go there and have a read as well. Page 70. Oh yeah, it's chapter 2. And it's at the end of chapter 2, gold is a revealer of falsely stated wealth. And I think that's what's happening. It's a reset, right? It's a monetary reset. It's not Klaus Schwab's fourth industrial revolution reset. With that, I'm going to wish you all a very good day. Take care. Bye.